Welcome to the deep dive. We know wading through financial reports and earnings calls can be pretty dense. Our job today is to cut through all that complexity for you. We're digging into Northern Trust's Q2 2025 earnings call, the slides, everything to pull out the key insights.
Exactly. And, these calls are so vital. They give you a real pulse check on a company's health, sure, but also where they're heading strategically. So this deep dive is basically your shortcut to getting properly informed on Northern Trust's recent performance and, importantly, their multi-year strategy.
All right, let's jump right in then. Northern Trust's second quarter 2025. What are the headline numbers? They reported net income of $421.3 million, earnings per share $2.13. But that EPS jump up 20% year over year, excluding notable items, that seems pretty significant. And 4 straight quarters of positive organic growth and operating leverage.
Yeah, that's the key takeaway, really. That consistent positive operating leverage. It means their revenue is actually growing faster than their expenses. In today's market, that's not just good. It signals real discipline, effective execution. They're growing smarter.
Smarter growth, okay.
And then you layer on returning over 100% of earnings to shareholders' dividends, record share buybacks, plus that just announced dividend increase, what, 7%?
Yeah, 5 cents, so 7%.
Right. And all paints a picture of a company that's, well, gaining real strategic momentum. Confidence is high.
Okay, strategic momentum. So what's actually driving that? Is there like a specific strategy or initiative behind this acceleration?
Absolutely. That brings us right to their One Northern Trust strategy. They kicked that off at the start of 2024, the core mission. To be the client's most trusted partner by using, well, everything the firm can do. It's about bringing it all together.
One Northern Trust, okay.
And it's built on 3 pillars that kind of feed into each other. They call it a flywheel.
A flywheel, interesting. How do those pillars work? What are they?
So first, you've got optimizing growth. That's fueled by things they've launched in the last, say, 12 to 18 months. Second is driving productivity. This comes from making their operating model more client-focused and capability-driven. And third, strengthening resiliency and managing risk. Basically, investments in controls and tech infrastructure.
Got it. Growth, productivity, risk.
Exactly. And they amplify each other, like their partnership with Timeline, that UK discretionary fund manager.
All right.
Northern Trust Asset Management and Asset Servicing teamed up. They delivered the investment management, the fund infrastructure, and the operational support. A whole package.
Ah, so it's not just selling one service, it's the whole solution.
Precisely. It's a shift to being an integrated partner. Much stickier, harder for competitors to copy that.
That timeline example does make it clear. So let's talk about that second pillar, driving productivity. You hear firms talk about bending the cost curve. What does that actually look like at Northern Trust? How do they get more efficient without, hurting service? Is there a risk of cutting too deep?
That's always the balancing act, right?
Right.
But this isn't just about slashing costs arbitrarily. It's smarter efficiency. They're really pushing AI tools like GitHub Copilot for developers and document digitization. These aren't just, buzzwords. They genuinely streamline workflows, cut down manual effort, help with decision-making, and importantly, manage risk better by improving how they handle data. Beyond the tech, they've also reorganized their global operations pretty thoughtfully under the chief operating officer.
And are we seeing results from that?
Yeah, tangible results. Headcount in asset servicing and operations, it's actually down for 9 quarters straight, about 7% off its peak. But here's the thing. These efforts free up resources. Money and people can then be reinvested into growth, into innovation. It should lead to better margins and a more agile company.
So efficiency gains funding the growth engine.
That's the idea. And the numbers back it up so far. Expense growth in the first half of 25 was 4.8%. So they're right on track for that full-year goal of below 5%, excluding, the usual caveats like notable items and currency swings.
Okay, that makes sense. Let's pivot then to that first pillar, optimizing growth. Where are they focusing their energy? How are they actually expanding?
Right. This is where that reinvestment really shows up. They're seeing big opportunities in a few key areas. First off, a huge focus on alternatives. I mean, the global private markets are just booming, right? Projected to hit over $60 trillion, growing twice as fast as public markets in the next decade.
Wow, okay.
So Northern Trust is attacking this from multiple angles. Their own platform, 50 South Capital, is having a record fundraising year. Just closed its biggest secondaries fund. And here's something interesting for you listening. Most wealth clients, they're typically way underallocated to private markets, maybe below 5%.
Right, I've heard that.
So there's massive room to grow there. Could go to 10, 15%, even 40% plus for some family offices, and it's often client-driven, a pull, with Northern Trust providing that curated access. In wealth management, they're building out a platform for third-party funds, working closely with 50 South's research team who know, 270 managers to get clients into those hard-to-access funds, tripled their pipeline there.
So facilitating access is key.
Definitely. And they have alternatives advisory services assets under advisement. They're up 66% year over year. Plus, in asset servicing, they're leading in semi-liquid funds like UK LTIFs and European LTIFs, supporting a bunch already, more coming.
But alternatives is clearly a major push. What about their traditional core, the wealth management business itself? Is that getting the same strategic focus?
Oh, absolutely. And it's a prime example of that one Northern Trust integration working. Their global family office, or GFO, business. Revenue grew 8% in the first half, but internationally, it was over 20%.
Impressive international growth.
Yeah, and it works because GFO uses asset servicing's custody platform, wealth management's fiduciary and banking smarts, and asset management's investment solutions. See the flywheel.
Yeah, it connects everything.
Exactly. And they launched something new this year, family office solutions for ultra-wealthy clients who don't have their own dedicated structure yet. Win rate over 75% in the first 2 quarters. They're finding niches.
Good start for a new offering.
Definitely. And geographically, they've reorganized into 4 core regions, bringing in new leaders, investing in advisors in places like Northern and Southern California, Texas, New York, really trying to grab market share.
And tech's playing a role there too.
Big time. AI and digital tools are helping digitize documents, giving advisors faster access to information, offering clients more self-service options. But crucially, they see it as enhancing the personal relationship, not replacing it, freeing up advisors for the important conversations.
Right, making the human touch more effective. Okay, so what about the other big pieces? Northern Cross Asset Management and Asset Servicing. Where's the growth focus there?
So for Northern Trust Asset Management, yes, scaling alternatives is big, but they're also pushing hard into custom SMAs, separately managed accounts.
The personalization trend.
Exactly. Things like direct indexing, tax advantage strategies tailored for individual clients. They're investing in tech to scale that personalization, take it international, get it deeper into both institutional and wealth channels. They also landed a big $1 billion equity mandate in Saudi Arabia. And on the ETF side, they're launching 11 new fixed income strategies next quarter. Think munis, fixed income ladders meeting specific investor demands.
Okay, broad efforts there. And asset servicing.
Asset servicing is seeing huge momentum. Alternatives assets under administration, getting close to $1 trillion.
$1 trillion, wow.
Yeah, and they're doing really well in the asset owner segment. That's about half their segment revenue, higher margin stuff. They've had some massive wins recently, like the $89 billion University of Texas A&M investment company, a big $55 billion Canadian foundation, a top 20 U.S. pension plan, Telstra in Australia, another large sovereign wealth fund in Saudi. Tech was often the key differentiator in those wins.
Sounds like they're winning big mandates.
They are, and their capital markets business is humming too. Revenue up 15% in the first half, with outsourced trading and currency management growing over 30%. So yeah, it's pretty broad-based growth across the board.
Okay, so we've gone through the strategy, the execution in different units.
Yeah.
Let's tie it back to the financials. How does all this translate into their longer-term goals? What are they aiming for?
Right, the big picture targets. And this really shows their confidence. They're actually raising their return on equity target.
Oh, really?
Yeah, it was 10-15%. Now they're aiming for 13-15%. They feel they've been consistently performing in the upper half of that old range. And the regulatory capital environment looks, well, constructive. So they're comfortable aiming higher.
That's a confident move. What about costs?
They're targeting an expense-to-trust fee ratio between 105% and 110%. That's an improvement from where they are now, around 115%. Speaks directly to those productivity efforts we talked about.
Okay. And net interest income, NII.
Hit a record, $615 million in Q2. Up 7% sequentially, 16% year over year. Full-year NII is expected to be up mid-single digits. Now, Q2 did have a bit of a one-off boost, about $10 million from some FX swap activity, but overall, average deposits were strong, $122 billion, up 6% sequentially.
And capital strength. Any concerns there?
No, it looks very solid.
Yeah.
Regulatory capital levels are well above the minimums. Common Equity Tier 1 ratio at 12.2%, Tier 1 leverage at 7.6%. What this really signifies for you is a strong financial cushion, stability, confidence. Their stress capital buffer is still at the minimum 2.5%, which is good.
And they're deploying that capital.
Very actively. In Q2, they returned $486 million to shareholders, $146 million in dividends, $339 million in buybacks. That's a payout ratio of 117% for the quarter.
Wow, over 100%. Okay. So, shifting gears slightly. Earnings calls always have those moments, the tougher questions. This time, there were pointed questions about Northern Trust's future, specifically their independence.
Yeah.
What was the response?
Yeah, that definitely came up. And the leadership response was very clear, very definitive. The chairman and CEO stated unequivocally that they are committed to remaining independent, said they've never entertained sale discussions, don't intend to, full stop.
And the reasoning behind that stance.
They believe independence offers a unique value proposition. Clients come to them looking for a different kind of partner, high service, focused expertise, not just another massive financial conglomerate. And they argue the One Northern Trust strategy actually reinforces this. You know how the global family office uses the asset servicing platform, how institutional deposits fund wealth management loans, that internal synergy works well within their independent structure.
Right. The integrated model relies on that independence, in their view.
That seems to be the message.
Okay. And related to that, the perennial question of scale in finance. How do they position themselves against the giants? Scale versus size.
Yeah, they tackled that directly. Their perspective is that size does not necessarily equal scale. It's a key distinction for them. Their goal isn't just to be huge overall, it's to achieve deep scale in specific valuable niches, like being the dominant player for U.S. pension plans or UK pensions or U.S. hedge funds, sector-specific scale.
So targeted dominance rather than sheer size.
Exactly. And they see technology cloud, AI, as a great equalizer. It lets them achieve scale efficiencies and reach without needing the same physical footprint as some larger players.
Interesting perspective. And what about the future? Things like digital assets. How are they approaching that? And the regulatory side.
They sound pretty positive, actually, using words like excited about the digital asset space, starting with stablecoins, looking towards asset tokenization. They're apparently developing capabilities for both private and public blockchains. Mentioned they've already tokenized carbon credits as a proof of concept.
So they're experimenting, building capabilities.
Seems like it. And they view the regulatory environment as very constructive overall, particularly around capital, liquidity, operational risk. So they seem to think there's a path forward for innovation there within the rules.
Okay, we have covered a lot today, from the One Northern Trust flywheel strategy, the productivity gains, the growth focuses like alternatives, right through to the financial targets, capital returns, and that strong stance on independence. It's quite a comprehensive picture.
It really is. They're clearly leveraging their long history, but also pushing hard on growth and innovation. Which leads to a final thought for you, our listeners. Considering Northern Trust's, what is it, a 135-year track record of stewardship combined with this current drive for growth and tech innovation, what really stands out to you about how a financial institution like this navigates its deep history while trying to aggressively grab future opportunities in such a fast-changing market? Something to think about.